it's time to do business again. 55 minutes around the world of business. That's what we do on Business Incorporated. Here's what we have prepared for you. We're going to share lessons from the just concluded debt meetings that held in Switzerland. And even more lessons from the South Africa Oil Conference that's holding there as that country ends its G20 presidency. And in Zimbabwe, there's been 6,000 transformers stolen. Welcome to the program. I'm Ini John Mekwa. Let's do business from the global space as usual. We'll start from the oil space where prices rose in early trade on Thursday on a decline in U.S. fuel inventories and ratcheting up of tensions in the Middle East. Also, the numbers right there, it's green, unlike what we had about this time yesterday, 0.4% up for Brent at $70.88, while for WTI, it's also 0.04%. However, it's $67.19. The prices rose after U.S. government data showed a higher than expected drawdown in distillate inventories for last week. Distillate inventories, which include diesel and heating oil, fell by 2.8 million barrels last week, and that's more than the 300,000 barrels drop that analysts had expected. U.S. crude inventories, though it rose by 1.7 million barrels, exceeding an expected 512,000 barrels increase. Global risk premiums rose after Israel launched a new ground operation on Wednesday. That happened in Gaza after breaking a ceasefire of nearly 2 months. On the other side, there's also the Ukrainian President Volodymyr Zelensky. He has said that a halt on strikes on energy facilities in the war with Russia could be established quickly, suggesting that the two sides were moving closer to potential ceasefire that could see the easing of sanctions and the return of Russian supply to the market. In the Americas, Chevron CEO has asked President Trump's administration for an extension of 60 days to wind down its operations in Venezuela. Venezuela's state-run oil company is making plans to continue exporting oil from its joint venture with Chevron, and this is according to reports from those in the field. Still in the global space now, it's still, this time it's metals and the Fed. We know yesterday they held benchmark overnight steady at 4.25% to 4.50%. Policymakers are expecting that the central bank will deliver 2/4% of a PC rate cut by the end of this year. So we see that affecting the non-yielding gold that is thrive in low. So that hold responded, the investors responded with an unchanged sentiment in the market, $3,048.37 for spots. U.S. gold is up 0.5% at $3,056.50. The ounce. Spot gold is unchanged, still at $32.79. Platinum is up 0.1%, and then is at $994.840. I'm sure soon we'll see platinum hit 1,000. Palladium is, however, unchanged at this time and still at $958.84. Now let's come to Nigeria. It's Consumer Rights Week. Yes, we had that conversation during Business Morning earlier today. The Executive Vice Chairman of the Federal Competition and Consumer Protection Commission, that's the FCCPC, Mr. Tunji Bello, is reiterating the Commission's zero-tolerance stance for the abuse of consumer rights. He was speaking at an event to mark this year's World Consumer Rights Day. And Mr. Bello explains that the whole Commission is not a price control board, but it will continue to do its best to ensure that consumers get value for goods and services.
Government officials and students gather to mark the 2025 World Consumer Rights Day. The annual event raises awareness on consumer rights, protection, and empowerment. The Commission is holding this event on the premise that every day consumers make choices that directly shape the world, which leaves the Commission with a mandate to protect consumers.
As we celebrate the 2015 World Consumer Day, as we celebrate 2023 World Consumer Day, for us at the FCCPC, it is an opportunity to dedicate ourselves to championing the interests of the Nigerian consumers. By the FCCPC Act of 2018, our mandate is clear, which is the promotion and protection of the interests and welfare of consumers by ensuring there is fair competition and ethical business practices in the context of a just transition, and this means ensuring affordability and accessibility. That is, sustainable choices should not be expensive or difficult to access. They should be within the reach of all consumers.
The theme, United for a Just Transition to Sustainable Lifestyle, reflects the urgent need to make sustainable and healthy lifestyle choices available, accessible, and affordable for all consumers. Speakers at the forum highlight the need to uphold people's basic rights and needs.
Today, we celebrate the World Consumer Rights Day with the theme, A Just Transition to Sustainable Living. Just how important consumer rights are can be quickly answered by a brief overview of some data worldwide. Hence, consumer rights and the 2025 theme are a billion impact-making concepts that are capable of setting the world on a fast-track achievement of sustainable development goals.
The consensus here is that consumer rights are global rights, which deserve the attention of all concerned.
And yet another week, the Chartered Institute of Taxation of Nigeria, CITN, has had its much-anticipated annual tax week for 2025, bringing together experts, policymakers, and key stakeholders in the tax sector. This year's event, with the theme Nigeria's Tax Reform Bill being in focus, has come at a time that's very crucial for this kind of conversation, and they do hope that excerpts from these meetings will make it to the reform bill. It's the annual tax week for 2025, organized by the Chartered Institute of Taxation of Nigeria, CITN. The meeting with the theme, Nigeria's Tax Reform Bill, paving the way for economic growth and fiscal sustainability, becomes even more relevant with the ongoing process to legalize the country's tax laws.
Packaged to address some salient issues of the implications, pitfalls, and prospects of the four tax reform bills. This event will allow you to be abreast of the changes, implications, pitfalls, and prospects of the tax reform bills.
We're expecting that we'll have fewer number of tax laws.
The keynote speech delves into salient points and targets of the reform, which includes diversifying Nigeria's revenue source from just oil and gas, dealing with the challenge of multiple taxation, equity in fiscal allocation, among others.
The system should be a lot more data-driven, technology-enabled. We should be shifting towards indirect taxes. The system should be slightly more simplified, which is part of the reason why, for example, release and allowances were consolidated. You don't need to be a taxman to be saying, which one is, how do I determine all the release and allowances that I'm entitled to? Just what's your income? Then tax it based on the tax rate. All right? So that's the whole idea. So make it simpler, all right? Make it more efficient, expand the tax net.
More ideas and targets make up the conversation by panelists, and it's all to contribute to a new tax regime in the country, which is expected to have skillful all processes and be ready for implementation by the second half of 2025. Well, that's the ongoing tax regime that we're expecting in the country. And yet another topic that's relevant not just to Nigeria, but almost all the developing countries is the issue of debt. And that formed the crux of the meeting that's just ended yesterday at Geneva, Switzerland. And that, of course, is International Debt Management Conference organized by UNCTAD. So today, let's find out some of those conversations that they had there, even though we've been bringing you excerpts of it on the program. We have joining us here Ms. Penelope Hawkins, senior economist, debt and Development Finance Branch of the United Nations Trade and Development, UNCTAD. Thank you so much, Ms. Hawkins, for your time, and welcome to the program.
Thank you. It's a great pleasure to be here.
Great. So we did get some excerpts, some of the conversations, the issue of prioritizing development in infrastructure and human resources, which seem to have been overtaken by debt servicing. So tell us, what are some of the high points around these conversations that you had at the conference?
Well, I think it's clear from the attendance of over 600 people and 107 countries that debt is one of the defining challenges of our era. And countries are concerned, the debt servicing is high, and the access to grants is, of course, shrinking in this current world that we live in.
All right, so there was also the talk around how the structure of both debt and credit has changed. More private credits now, and that makes it more expensive. Could you tell us maybe some of the conclusions that the meetings came to in that area?
So, of course, you're right. The composition of credit really does make a difference. And what we have seen is that increasingly we as the UN, together with us other experts, are calling for more longer-term finance so that we can reduce those payments. You think yourself of how much easier it would be if you had a 30-year mortgage rather than a 7-year mortgage. And so this is what countries are facing. They have to turn over their debt quickly at high prices. If this was a longer-term space, it would be much easier for them to afford those repayments.
So did you reach any kind of solution, possible solution, especially for the African countries, the emerging economies, on how this can be managed better than what it is now?
So then several things. For the countries themselves, what is clear and what comes out is that it is possible for borrowers to have more agency in this space. They need to be managing their data. They need to be more transparent about what is happening to their finances and debt. And they are able to enunciate what they need to achieve that. Then on the international environment, there is increasingly pressure to say, how do we encourage, for example, multilateral development banks to offer longer-term finance to help ensure that development takes place in those countries, especially in Africa.
So, you know, sometimes these meetings come, great ideas are shared. What is the UN doing to, at least one way or the other, ensure that it goes beyond the talks, you know, to actually implementation?
So there's several things. We use our voice and our influence in international environments. But practically for countries, UNCTAD is one of the forerunning providers of a debt management and financial analysis system that is used now by over 61 countries, many of them in Africa, where we assist countries to manage their debt, data, record it, make it transparent, use it to engage with markets and with institutions around the world. And that process is moving forward through a brand new generation software, which we launched yesterday at the conference.
Tell us more about the software and how you can get adoption, especially from African countries.
So already we have many countries in both sub-Saharan Africa and Western and Northern Africa who use this product. For example, one of our most recent countries was South Sudan, that joined up to say, we understand we need to be tracking the expenditure of our governments, both centrally and generally. We need to be able to report that to our people so they understand what happened with the debt that we incurred, which sectors it went into, and what the consequences are for them as a country to repay and service that debt. Because remember, in the end, it is the taxpayer who is involved in servicing that debt.
So who can have access to this app? Is it the private sector? Is it the public sector? Who's keeping watch?
So this is primarily designed for ministries of finance, for central banks, and for even securities depositories, so that that data is all merged into an overview of what the debt components are in a country and how they need to be served. So what we do is we deal directly with the governments of countries. We provide this as a global public good, in the sense that the UN helps subsidize the cost of this production, and we install this, we provide the training, and we ensure that countries are capacitated to take this important part of their agency into their own hands.
Yeah, but if it's members of the public sector who are in government that have access to it, how do we ensure that there's actually the transparency? I thought it would be perhaps people or arms in the private sector, so, you know, we know that that interest is protected, and not perhaps the government trying to just cover up and protect its expenditure.
So there are two ways in which we try and encourage much better publication of this data. Firstly, for most countries, they are obliged to report this to the World Bank. They have to do that in order to have access to any kind of concessional financing. That's the first thing. But secondly, we are creating, especially through this new system, this new version, we are creating the capacity for countries to very easily have public bulletins that can be easily understood. Because the key thing here is not just more data. It's more data that enables people to be informed and to actually understand the undertakings that their countries have made on their behalf.
All right, well, we'll see how that works. It sounds exciting, and we hope that it actually is used the way, I mean, I guess the incentive attached to it could be a drive for our governments to adopt and follow the rules of that. Thank you so much for sharing this with us this afternoon after your very number of meetings that you had all through the week. Senior Economist, Debt and Development Finance Branch of UNCTAD, Ms. Penelope Hawkins.
Thank you very much for having me.
Let's head to the markets now with Aniti Edits. Aniti, I hope we have better news today from the NGX?
Well, Ini, I wouldn't say it's a better news because the market has just not been very steady. The bears have actually been in the lead. And then, of course, I'll still say it's another dead cat bounce in terms of the intraday market numbers.
Yeah, but have we recorded any green close this week?
This week it has been a 3 straight days of losses. And,
wow.
Well, as a matter of fact, I would need to have our analysts to talk more about that, because about 2 days ago, we also mentioned this, and the earlier analysts had already cited some factors, but that seems to defy the reason, so we need to take a look at what actually...
Take a second look.
Exactly. In
the
midst of banks and insurance companies not revealing their full year 2024
yeah, but
results.
They are not revealing, or they're waiting for approvals?
Well, on one side, they said, yes, the regulatory approval from the central bank, because on their side, they can't do anything without the
exactly. So it's not like they don't want to reveal.
Okay, so now we'll talk about how that impacts on the market. Okay, so now let's talk about the markets at intraday movement. As usual, we always start from the Nigerian front. The NSE NGX All-Share Index it was down by about 0.44% yesterday, losing about 288.89 billion naira. Year to date has reduced all the way from 4% to about 1.92%. That's in the green, but that's all the way down from what we had about nearly 5%. And then month to date is down by about 1.23% as we speak. No thanks to the losses from MRS, as well as about 34 other losers. So we have just about 7 trading days left in the month of March. That excludes today, 7 trading days. And so far, the month of March has been in the red, like we always say, beware the eyes of March. But it's not just that the market is down. It's one opportunity for those who want to enter into the market when the price of some high-value stocks, mid-cap stocks, or low stocks of preference by some willing investors, they might want to key into that. But it's not good news for those maybe who had expected, who didn't take advantage of the high price of the market. But now let's take a look at the numbers there. The numbers, the All-Share Index yesterday, we saw at intraday, it was hanging about that 105,000 points. But lo and behold, it's dropped below that level, 104,091.77 index points. That's for the markets, but it was just a tad intraday, so this number is just, let's just say, just a mirage, because at some point the market is going in between profit-taking and sell pressure, and some people are trying to come into the market while some are trying to exit, take profit on some of the high-value stocks there. So that's just it for the market on the Nigerian front. But no, before that, I think that was kind of a fast finger. Let's talk more about the South African stock market. South African stock market, yesterday we were talking about that, the 90,000 level, which it crossed into. But at some point, intraday market numbers, the market was down by 0.18%, 89,986.81. We see the impact of some sell pressure there affecting the Johannesburg Stock Exchange All-Share Index. So that's the lone loser at intraday. But take a look at the other numbers on the other sides of the African continent. We see the EGX 30 as well as the Nairobi Stock Exchange in the green. For Nairobi Stock Exchange, it was there in the green for the close of Wednesday's trading session, while for the EGX 30 was also in the green. If you can have that number for our viewers to take a look. And so that's just a snapshot. There you see there 0.74% intraday. One of the biggest gainers there, 31,581.75, while the Nairobi Stock Exchange All-Share Index for the close of Wednesday session, 0.68% in the green. 130, yes, it just crossed into the 130. Well, that's really a small number when you take a look. All the rest, all these are in the thousands, but this is just in the hundreds of units. So, but fair value is still in the green. So that's a snapshot for the markets on the African continent. Now let's talk more about Nigeria's stock market. And this time, our focus is, like I mentioned, the month of March. 2 days ago, we said, well, maybe the factors are the trade tariff by President Trump, macroeconomic variables or whatever, but this time it's really looking not too explainable, but to give us more insight into why this market is still very, very bearish and deeper into the bearish territory for the month. Let's bring in Tajuddin Olayinka, investment banker and stockbroker, to give us details about the market's movement and as well as some other factors. Thank you for joining us, Tajuddin.
Thank you very much. It's my pleasure. Good afternoon.
All right, sir. So now I would like to start first with the performance so far. We've seen 3 straight days of negative trading sessions so far this week. And then for the month, it's down by about more than 1%. Now, tell us, what is really the matter with the market in terms of the downturn that we've seen so far?
Okay. Some time ago, I mentioned that there was this delay rally that we experienced in 2014 December, particularly between December and January. We had a delay rally. And so that actually kept some investors away from the market, not participating. And so at the time when the rally should have reached its peak, where prices will have reached their peak and the results were not expected, the results are not also forthcoming. So all these are actually helping to shape what investor decisions should be. And so with that alone, it's a problem on its own. Then we saw what happened at the let me say 3 auctions ago, right from the last auction, like NCB auctions, where CBN in a way panicked by further, increasing the supply of government securities to be able to attract, foreign inflow. So they don't know what is actually responsible for, this so-called reversal of inflow. They don't know, but they just assume that maybe because at about the 3 auctions ago, the drop in yield, the drop in yield actually discouraged inflow, but it wasn't so. And we cannot say that even now that they have also raised the yield, that we are having improved inflow from foreign portfolio investors. So all these things are helping, actually affecting investors' decision as far as equity is concerned. Because what it tells us in the market is that when are we going to be out of this high yield environment? So investors are trading cautiously, and if you look at the value, the turnover, the market turnover is also very small. That is quite unusual. So that suggests that investors are trading on a cautionary note, so that they do not burn their fingers. They don't know whether we are going to remain on the, on this high yield environment for too long, or if something that's to actually moderate now that inflation rate is also going down. Going by what we have on the rebase inflation numbers.
Okay, so Mr. Tajuddin, yes, earlier in the week we had already put out that outlook that the market will be bearish, and of course that came in line with our expectation. But this time, let's talk about the banks and the insurance companies which have not released their full year 2024 results to the market. Is there any reason for the market to be worried about this, and what impact could this have in the market already downward trend?
Okay, the result is actually one of the reasons why we do not really have investors showing much interest. But we already have top quarter results which we have all analyzed. But because some of these banks also issue new shares, and these shares will qualify for dividends if they declare that dividend eventually. But because the banks have not released the results, so investors are also trying to be sure, what kind of earnings we are getting, what earnings per share we are going to get, and what dividend per share we are going to get. So what is causing the delay is the central bank. Central bank has not approved some of these results. Until the results are approved by central bank, no bank can release their results or even pay dividends. So the problem is coming from central bank, and I think it's just it's a temporary problem. I don't think anybody should panic. It's just a temporary problem. By end of March, I think we should be through with that.
Thank you so much, Mr. Tajuddin Olayinka. I think that would actually assuage the fears of some investors, both those within the market and those who want to make an entry into the market. But thank you so much for your analysis on the show.
Thank you, too. It's my pleasure.
That was Tajuddin Olayinka, investment banker and stockbroker, giving us details of the market, which is already in the bearish territory. Okay, now let's move over out of Africa into the Middle East. We see Middle East GCC stocks in a mixed mood, and this is coming in the midst of some economic and financial developments. First, starting with the two markets on the Dubai, the United Arab Emirates, one in the green and one in the red. The Dubai 0.24% intraday gain, and this is coming in the midst of reports that U.S. President Donald Trump, not just the tariff talk, he's also talking about economic ties with the UAE, where he's announcing that the U.S. intends to have a $1 trillion economic ties, which is going into the areas of strengthening bilateral ties, focusing on technological advancement, economy, energy investment, as well as artificial intelligence with the market on the Middle Eastern region. So he's been there talking with the UAE's National Security Advisor to discuss that. That's which is coming more like a US and UAE relationship. Now, that's for the UAE. And still with the UAE, you know that the UAE has announced a deal with Ethiopian Airlines to fly Abu Dhabi to Addis Ababa flights. That's in a bid to boost the UAE's Africa connectivity. So that announcement is part of one of the reasons why this market is in the green. And on the other side, we'll see profit taking an impact on the Abu Dhabi Stock Exchange Index. Now, let's look at the other side of the market for the Saudi Arabia. It's in the green. And there's also news that the Saudi Arabia is issuing exploration license. This is an oil producing country, but it's issuing an exploration license for mining, which is considered as one of the alternatives to boost revenue, not just for oil, but for that industry, which is the mining sector. So that news has also rallied the Tadawo at about 0.27% at intraday, 11,740.56 for that market index. So that's on one side. And then for the Qatari Stock Exchange index, intraday down 0.47%, 10,336.08. And this is also coming on the news that the country, the Middle Eastern country, saw about $61.3 million worth of deals carried out within the real estate sector of that country just last week. So, but for that market didn't really react to that news because of so many other factors. Let's not forget the Middle East region is still focusing on that the Israeli strike, which has just paused the ceasefire, but there are talks about trying to get back to that ceasefire talks, which was just about 2 months and just failed to hold on. Now let's move out of the Middle East and go to the US, where we see the stock futures slipping. This is after closing overnight in the green, and a day after the US Federal Reserve, as the world's #1 central bank, kept its interest rates unchanged. But the markets, yes, it rallied, but for the stock futures, ahead of the opening bell, they're in the red so far. And this is coming after Jerome Powell gave insight into the U.S. economy, although it says that the U.S. economy is not really facing not as expected, that it will be impacted by U.S. President Donald Trump's tariff announcement. But what the market was focused on later this Thursday will be the Philadelphia Federal Manufacturing Survey and report on existing home sales. At the same time, it's also expecting about some corporate results from Nike, FedEx, and Micron Technology, which are expected to report their earnings later today. That's about 7 hours difference in between Nigeria and US. So later, when the opening bell begins, later we will be expecting those results to be announced on the world's biggest economy. Now, let's move over to Asia, where we see Asian markets closing a little bit mixed. One central bank had announced a pause in monetary policy decision. That was Japan, US also, and now China has also announced a pause in their interest rates decision following the path that the US took just on Wednesday. But in terms of the market, it's kind of a mixed picture there. 0.25% decline for the Nikkei, which has dropped all the way from the 40,000 level, which it was 37,751.88. Green picture for the Kospi, red picture for the Hang Seng and the Shanghai, as well as the Nifty 50. A little bit mixed picture there. So, Ini, that's a close for the markets.
All right, Anise, thank you so much for taking us around the markets.
Pleasure.
Now, one of the things we would remember COVID-19 for is remote working. It seems to be gaining grounds, even here in Nigeria, even though it looks like there are some professions that would not allow that. But let's talk about cloud-based solutions. Perhaps this will help elaborate the adoption of remote work and the advantages of it. And to discuss this, we have Chimezirim Mbasi joining us from the UK. He's a cloud-based solutions specialist. Chimezirim, good afternoon and welcome to the program.
Good afternoon. Thank you.
Yeah, so do tell us, we have been talking about remote work. Is it possible in all fields when you talk about remote work?
Yeah, I believe it is, actually. I believe it's possible from every angle, right? Business, almost all companies can adopt remote work now. You have a lot of tools. We have almost every tool that makes it possible for you to do everything from the comfort of your home. All right, so you don't necessarily need to go to the office or meet someone in person to be able to get things done, unlike before. So almost there are tools like Google Meet, there are Teams, there is Zoom, right? And other tools that facilitates the possibility of you being able to do everything remotely without having to go to the office.
And I guess cloud computing has a role to play in that.
Yeah, it does. So I think cloud computing has ensured remote work isn't just a temporary fix, but a lasting operational model. Right? The fundamental objective of cloud platforms is to allow employees to securely access computer data, company data, apps, and tools from anywhere, right, on any device. And this alone eliminates the dependency on physical offices. Right, it ensures teams stay productive, whether they're at home, in a cafe, or halfway across the globe. So tools like Teams, Google Workspace, all cloud-based, enable real-time collaboration, document sharing, all forms of communication. So this replicates or even improves in-office workflow, making remote teamwork frictionless and scalable. So by enabling remote work, the cloud lets companies, hire and retain top talent. So this alone creates a sustainable talent model that isn't bound by geography. So in short, cloud computing isn't just about enabling remote work, it's about providing the reliability, security, and adaptability needed to make it a permanent, scalable strategy.
Yeah, but what about the infrastructure? When you look at a country like Nigeria, doesn't it look like the lack of cloud infrastructure, for instance, deters the adoption of this remote work?
So, well, I wouldn't believe so, right? I think one thing the pandemic did for us was it didn't just temporarily disrupt work. I think it reshaped expectations, right? It proved that remote and hybrid models aren't just possible, but advantageous no matter wherever it is, Nigeria or outside Nigeria, right? So businesses now can scale resources instantly. It can scale resources instantly without it adding server capacity during whether it's adding server capacity during downtime, whether it's downsizing during quiet period. The cloud handles that for them. So you don't really necessarily need to do any special thing, right? So there is no, I don't believe there is any limitations based on location or infrastructure of Nigeria. So in essence, even beyond tools, I think the cloud supports the change in workflow dynamics, right, by fostering a culture of autonomy and accountability across geographic regions.
Yeah, but more adoption also means more exposure, to cloud and cyber security or insecurity in this case.
Well, yes, true. But I think the cloud handles things like this, right? There are security tools that help and make sure that productivity is not affected by trying to ensure security. There are tools like there are infrastructures like zero trust architecture, which is a security framework that assumes no user or device, whether it's inside or outside the network, is trusted by default. So it means that it requires continuous verification and authorization for every access request by any user. So I think companies like or tools like Okta or Microsoft Entra ID, right? They use tools like this and they ensure that only authorized users are given access to these tools. So I don't think there is any compromise to security when it comes to using cloud infrastructure, right? So I think actually that secure collaboration is baked into tools like Microsoft Teams, like I said, Google Workspace, right, with encrypted chats, expiring file links, auto compliances to protect your data from outsiders, right? So generally, I believe that cloud security isn't a barrier; is the invincible shield that lets remote teams operate safely and seamlessly.
All right, Chimeze, we see what President Trump is doing, with DOGE and discouraging remote work and all of that. And even here in Nigeria, one of the conversations around this is how can the employer be sure that the employee would not cheat on the time of the company when you're doing this remote work. Does cloud computing also help in this?
Yeah, it does. It does. So again, I'll be specific to Microsoft Teams, which is something I use, right? You can monitor basically when someone is at work and when the person is not at work, right? If I leave my system for 5 minutes or 3 minutes, the management would know that I am not there, right? But I think it's not even about monitoring. I think it gives you the capacity. It gives us the capacity to not just focus on logging how many hours someone worked, but focus on how productive the person is. Because it's not about where the person is, it's about what the person was able to produce, how productive the person was in the period that was given to the person. Yeah, so I don't think in any way that it gives people the ability to cheat. Actually, it gives them the ability to be flexible with work and be very productive and get things done, irrespective of wherever they are doing it from or how comfortable they are where they are doing it from. So I don't agree with him on saying that people will cheat on that. No, I actually think it's the opposite. People get more productive when they are more comfortable.
All right, thank you so much, Chimeziri Mbasi, cloud-based solutions specialist, for those insights into the cloud-based infrastructure.
Thank you.
All right, now let's head to South Africa, where the Minister of Mineral Resources, Gwede Mantashe, has called for the Southern African region to strengthen its petroleum industry and position it where it rightfully belongs. He was speaking at as South Africa assumes the G20 presidency, and that the sector must seize this opportunity to advance its policies and drive growth. He made these remarks at the 4th Annual Southern Africa Oil and Gas Conference in 2025, which is underway at the Century City Conference Center in Cape Town, South Africa. And now, well, you can get more on that on our foreign programs from that conference in South Africa. But now let's talk about hamburgers. So I read some news that there's shortage of beef in the United States. However, Americans are still longing for hamburgers. Well, I wonder what's happening right here. You know, we always look inwards. So hamburgers, of course, they're widely, globally, even here in Nigeria, consumed. A lot of people say it's the elite's food. I wonder if that's still the case. We have Miriam Ode, analyst with Financial Derivatives Company, joining us for that. Hi, Miriam. Can hamburgers still be referred to as an elitist menu or food, or is just the Gen Zs?
Good afternoon, Ini. Thank you for having me. So, yes, hamburgers are mostly consumed by the elite Gen Zs. And what we see is that even though there has been an increase in the price of hamburgers in Nigeria, it has actually more than doubled in the past year. And even though we've seen this surge in its price, we still see that there's still a significant demand for the product. And this is what happens within this target audience, that's the elite Gen Zs. So what we see is that an increase in price results or has a disproportional impact on the demand for the product. So even though we have seen this surge in price of hamburgers, which has increased by more than 130%, even though we have seen this surge, there's still significant demand for the product. But if we compare the price of hamburgers, the change in the price of hamburgers in Nigeria and the US, like you mentioned, there's still strong demand in the US. And this is because the price of hamburgers has only increased by about 22%. Within this period that the price of Nigerian hamburger has increased by 130%. So it is not strange to see that the demand in the US is still stronger than that in Nigeria. And in Nigeria, hamburgers are mostly consumed, like I mentioned before, by the elite. So it's considered a luxury product, if we just use the term luxury.
So if it's an elitist food, then that means, I mean, inflation cannot affect them. They're Gen Zs, they have sponsors, right?
Not necessarily. Remember, Gen Zs are also hardworking Nigerians, and so there are other means to support this lifestyle. Other legal means to support this lifestyle, and we still expect to see their demand stable, even though we might still see a slight decrease in the demand for hamburgers because purchasing power is reducing, and this would in turn affect demand, and income levels are remaining relatively stable for now.
All right, Miriam, thank you so much for that. I'm sure, I mean, even those who are not elites will find a way to create their own hamburger. Here there's another hamburger that doesn't have to do with beef. But thank you so much, Miriam Ode, for that, talking about hamburger this afternoon.
Thank you, Ini, for having me.
All right, let's go to Zimbabwe. Yeah, so you used to hear of transformers being vandalized or stolen. Guess what? It's not just in Nigeria. Energy and Power Development Minister in Zimbabwe, Julie Moyo, has said that the nation is grappling with fire supply of electricity, and that's because of vandalism of infrastructure, and 6,000 transformers have so far been stolen. That is sad, you know. But he was addressing a parliament while responding to questions, and he demands to know government policies that can be done for replacing damaged and vandalized electricity. And Zimbabwe Electricity Supply Authority, that's ZESA, was previously quoted in media reports saying that it lost electricity transmission and distribution equipment valued at $2 million to theft and vandalism between January and October 2024. And this, of course, has left a bigger part of the country in the dark. Africa, my Africa. Let's leave Africa for just a bit and head to Berlin. There, the urgency of world's climate crisis is being broadly accepted, well, I guess, except for President Donald Trump. And companies have now started to react and make environmental claims in their advertising. Some might be prudent and others not so much. Let's find out what's going on. I hear an environmental group in Germany. They are talking about this last. Tell us, what's this about?
Yeah, thanks for having me, Ini. Let me tell you, this is, we're getting some lawsuits here. We're talking about a group called the Deutsche Umwelthilfe. Like you said, it's an environmental activist group. And with this latest batch of lawsuits, they're specifically going after a few companies they allege might be misleading consumers with advertising. Now, one should know, as you pointed out too, that of course in Germany and in other places, more consumers are becoming, or have long been becoming, more tuned into environmental problems. More consumers are trying to change their habits, opting for products made in environmentally friendly ways, sustainable production methods, and such. So with the consumers, of course, changing habits, there was always the risk that some companies might be just jumping on board of that train and could be using certain keywords or claims in advertising without actually delivering. Now, among the companies, hit by lawsuits here are cosmetics maker Coty, to give you an example. They are advertising an ocean-friendly sunscreen, but it's unclear what they mean by that. Like the ingredients in the lotion that might not be harming the oceans when freshly lotioned up sunbathers go for a swim. But the question is, how about the plastic bottle the lotion comes in? Many of those end up in the ocean too. Or let's look at these so-called sustainable shoes from a major shoe seller here in Europe. Nobody knows. It's entirely unclear what actually makes these shoes sustainable, and that seems to be the problem here in this lawsuit.
Yeah, well, it does seem that there's so many sides of the story that have not been touched yet. I mean, ocean-free or ocean, I mean, it's a whole lot. But how big can this story get, seeing that it's all about companies making a handful of claims?
Well, it is actually a huge story, Ini, because while these latest lawsuits indeed cover only 5 new products, there is much more to the story. In the past, for example, this same activist group has sued sportswear maker Adidas, and that is not over a certain product, but over the general promise that company had made. Adidas had pledged it would become climate neutral by 2050, but the company has actually not given any details on how they will be attempting that goal. So again, the group says there's a company here that abuses people's focus on the topics of environment and climate crisis, but instead of working towards serving this need, taking responsibility for the planet and actually changing their ways of production, for example, they're indeed mostly focusing on aspects of marketing, presenting themselves in a climate-friendly way at best. That would be so-called greenwashing, or it would almost be outright defrauding customers at worst.
Wow, I hope they don't at the end of the day last. But let's look at the markets now. How are the stocks behaving this afternoon?
Yeah, we're having a pretty rough day in Frankfurt. DAX down 1.5% right now, adding to yesterday's losses. But today's talk is mostly obviously about interest rates. We've had the Fed decision in the US late yesterday, of course, and here's what happened. The Fed, of course, has left, as you know, rates untouched and sticks with 2 projected cuts for this year. Now, interestingly enough, that was fine with US investors, but it's not fine with investors here. Markets, as I said, are down on the news. Now, what irks investors? Obviously, it's the fact that the Fed is seeing more risk for the U.S. economy. That, of course, no wonder, as we're seeing President Trump starting trade wars and also his on and off tariffs. There's just a lot of uncertainty in the markets. Anyway, there's 2 more rate decisions expected today. The Bank of England likely to leave rates unchanged, and the Swiss Central Bank is expected to lower rates by 25 basis points.
Yeah, and you won't finish this conversation without mentioning President Trump. But thank you so much, Lars. Talk to you tomorrow.
Yeah, thank you, Ini.
And I wonder if President Trump has also moved the crypto market, at least been moving southwards, so sideways.
There's anything like southwest in that market. But definitely, it's all about Trump still. And he's saying he's not happy with the latest hold by the U.S.
That's the second time he's expressing that.
He says, do the right thing. That's his message to the Fed.
I wonder what the right thing is.
He wants a cut. Okay. Right. So is he going to get that cut? We'll definitely find out. But let's get a check on how the market is looking. Right there, we're still seeing, for the headlines now, surge in Cardano dominance. We're seeing Cardano trumping the likes of Ethereum and Solana with dominance there. And we also see BitNominal launching a CFTC-regulated XRP futures. Let's bring in Element Damble now to bring us up to speed. Maybe we can check his crystal ball and what's happening with his market. Great to have you, Element. Hello, Element.
Oh, hey, Lonnie,
fantastic. Yeah, I hear you now. So definitely we're seeing Bitcoin there making some kind of bounce with Ethereum and the general market right now. But is this the one that takes it back towards 100,000? What are the charts telling you?
You're thinking, it depends on what time frame you're looking at. If you're looking at the monthly time frame, it looks more uncertain. It looks like we could be positioning ourselves for a fall even potentially below, let's say, 75K for Bitcoin. On the daily chart, I think essentially what you're going to see is a lot more consolidation, because how you're seeing the monthly chart currently positioned, again, with the moving averages, short-term versus long-term, it does look like we are set to see a downwards crossover. And generally, they do take quite a while to happen. And sometimes you can have misleading moving averages where it presents itself like a crossover is going to happen, and of course then it kind of like diverts into different directions. So I think in the meantime you may see a move, let's say, back towards 90K for Bitcoin. In terms of 100K, I think there's still a lot of volatility in the market for it to cross that territory.
All right, so what are you seeing so far playing out in the first quarter with the trade tariffs and all of that? Would you say it's time to maybe step back from risk assets for the rest of 2025?
I'd say for the rest of 2025, I would say, again, sometimes you do have to, again, check the temperature, check the weather, and sometimes there is the need for an umbrella. And it does look like Q1, Q2 was definitely the time to do that and seek shelter, hence why we're looking at gold reaching a record high pretty much every other day at this point. But again, I think some of it is somewhat expected. So I would say heading into, let's say, the later part of the summer, I wouldn't be surprised if we do have a more bullish outlook.
All right, we'll definitely be looking out for that. Edmund Dambell, CEO at Savior AI. Thank you for coming on today.
Cheers, thank you.
Yeah, so yeah, you might want to get your umbrella.
I wanted to ask you first, Ladi, where's your umbrella?
Oh, yeah, it's somewhere.
Invisible?
Yeah.
Oh,
invisible.
virtual. It's virtual
Exactly.
assets, so it should be virtual too.
Yeah, so we're seeing gold crossing 3,000, so that's the umbrella for some investors.
For you?
Some investors.
So I know if I can rob you. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated today. The week is not over. That means we have a final one tomorrow, God's grace. But you can watch YouTube, and then you get this over and over again. I'm Ini John Mekwa. Enjoy the rest of it.